Hello, and welcome back to another episode of Private Market Talks, where we take a deep dive into the dynamic world of private markets with industry leaders. I'm your host, Peter Anantaja. Today, we're exploring a field that's transforming not just technology, but also the fundamental ways in which we invest and manage capital, artificial intelligence. Joining us today is Dr. Mohammad Rasouli, whose insights are shaping the future of AI for asset managers. Today, we'll explore how AI is integrating into private funds, the challenges and opportunities it presents, and what the future might hold as these technologies become increasingly sophisticated. Dr. Rasouli is a founder and CEO of AIx2. He's a Stanford AI researcher, where he also co-taught empirics of marketplaces. He's a former Microsoft engineer and an ex-McKinsey consultant. And in that role, he worked with some of the largest PE funds to help with their AI transition. So not only is Dr. Rasouli an active researcher, he has the practical experience of working with funds in their efforts to adopt and implement AI responsibly. So tune in as we uncover the depths of AI's role in revolutionizing the landscape of private capital investing. As with all our episodes, you'll find a full transcript of this episode, along with other helpful information at privatemarkettalks.com. And be sure to subscribe. And now, my conversation with Dr. Mohammad Rasouli. Doctor, welcome to Private Market Talks.
Thanks, Peter. It's great to be with the PMT.
Before we get into sort of the detail of uses and how to adopt and implement AI, perhaps you could take a minute and level set our listeners as to what we mean by AI and the differences between, predictive and generative AI.
That's a great question. That's a question that I often explain when I talk to fund managers or in my courses to executives. Basically, what we mean by AI is when the machine takes the capability to synthesize data and bring actions to us. That's different in this definition with what we used to know in last 10, 20 years with digital and digital transformation, which is mostly a dashboard of data. Taking us to the next level and being able to take the action, machine taking over to the next step and a complete result, that's what the AI means. Now, there has been this generative versus predictive AI that, especially with the growth of the LLMs, large language models, and ChatGPT, Anthropic, and other, the generative one has become more commercialized these days. The main difference is that the generative AI is around the ideas of large natural language processing, which is basically generating a sentence, generating basically a piece of something similar to what we had before. Now, LLMs are about generating language, but we have generative AIs for images, we have for videos, for other things. The way these technologies, generative technologies, work is that they take a sample of a lot of existing dictionaries and Wikipedias and others about language, or many photos of cats and dogs, and then they make a new essay, a new writing, or a new image of a cat or a dog that never existed before, right? In this sense, they are generative. But there is always these other categories of AI which are less commercialized, because right now OpenAI has found a way to commercialize generative AI for especially not natural language processing and languages. But in future, the predictive AIs will be also potentially commercialized. And those predictives are about predicting something in the future. Like for our audience, probably predicting the stock market price tomorrow or a week from now is like one good example, right? You can also predict the chance of success of investing in an asset. You can predict the chance of an M&A success that you can do. You can predict an exit strategy, like what is the price in this exit strategy. Everything that is about the future and you want to predict, that's part of the predictive AI algorithms.
And so how do you distinguish sort of the creative from the predictive?
So when you go to ChatGPT, I assume most of us have had this experience by now, and you say, write an email for me. And the way ChatGPT works, if you follow that, it's kind of bursty. It gives you 3 words, stops, then does 3 words, then stops. What's happening in the background is that it's a creative machine in the sense that it says, for this question, for this sentence that someone asked, if I was talking to somebody and it says, write an email for me, let's first create the next 3 words. What is the answer? Creating them, like imagine what it is. then create the next three one, then create the next one, like embed them and keep creating, right? In the same way, if someone asks about create a new image, it's like creating something similar to all the cats and dogs the machine had access to, but it's not any of them. Something with similar feature that we assign a tag of a cat or a dog to that. That's creating. Predicting is basically saying that if this was a trend, like these prices change in this way in the history, now what would be the trend in the next day? How would the things change in the future? Like a lot of us knows about regressions, for example. It's a simple prediction. Regression is one line through many like dots of information, which predicts what is the trend in the future. That's the prediction kind of use cases that we talk about.
I know that there's been a tremendous pace of change with AI. The development has been going on at an incredible pace. Can you put it in some kind of context for us? Because I think this is going to be relevant to how quickly funds have to adopt AI and how they have to adjust to it. So giving some sense of, well, how fast is this changing?
Amazing question. So we run this Stanford AIx2 survey with the fund managers, for which we interview the fund managers, CEOs, CIOs, COOs, and we ask a bunch of questions from them. And those who participate, we give them the results, existing results in a week. So in that survey, we have this question of by which year you predict that majority of the funds in your business will have AI solutions in-house for their day-to-day job, like writing their due diligence, like finding deals, drafting investment memos, and others. What is your prediction? And it's interesting how we see these answers evolving over time. And I asked the same question basically when I was giving a keynote in private equity real estate, and there was like 300, 400 fund managers on the floor, and I asked them like, what is exact same question? What year do you think AI is going to take over this industry? And the answers are shockingly near future. Like average answer for us right now has come from end of 2026 to 2025, and it's just keep like getting like more and more short term, because the reason behind that is that number one, the community of investors, they're naturally exposed to AI as an opportunity to invest, so they hear about it and they learn about it. That's a good like way. That's a way that they learn about this technology. And the second thing is that the whole community has realized that there are some immediate gain that can happen with AI, especially starting with generative AI, which is more commercialized and accessible for the funds. And that has that leap, that like cultural shift, that awareness, that education is basically what is driving now this faster adoption across the funds. And I have talked to many funds, small and large, that they have already started having some AI experience. That's one of our questions in the survey that we asked the fund managers: what AI solutions do you have experience with? What is the adoption rate across your employees? What's the success? What's the shortcoming? And you see more and more success stories these days, more and more awareness. I think we have definitely passed the first phase of the S curve in terms of adoption. Is literally the place that everyone has learned about AI, and they know and they have heard success stories, and they are looking for solutions that where to start and have a roadmap to have successful AI. That's what most of the funds are trying to do these days.
How many of those questions on that survey did you use AI to generate?
Like to be honest, we did there's 40 questions, and we did use ChatGPT actually to edit them and like ask help. But no, we did a lot of manual work. I did these kind of surveys back in the PhD times. The rest of the team are PhD.
Right. Speaking of the use, you touched upon two different things. One is how funds are using it today, and how you can envision it in the future, where it is going. And I'd like to start with, how is it being used today in funds, and if they're not using it today, how should they be using it today?
Yes, that's a very good question. Let me tell you a little bit about the history of AI, especially in alternative investment. That's one thing that I always like put in our education package for fund managers. That the first chapter actually we covered what's the history of AI in this business. So AI coming to hedge funds has been around like 15, 20 years in terms of quantitative trading and others. And the idea of that was predictive AI. Like, can we predict the stock market price for certain stocks in the future? And I know a lot of my PhD friends who graduated from electrical computer engineering. They are now working in hedge funds in New York and making great progress. Now, some 5 years ago, I would say the idea of AI came to private equities, and the big private equities, the larger ones, started having internal AI teams to develop algorithms for predicting the success of investment in an alternative asset, like your success investment in a company or a secondary or investing in debt or credit or any type of strategy they have.
So can
Now,
I just to pause that for a minute? What you're saying is they were using the algorithms to, if they bought a company, they would use that algorithm to determine the likelihood of success of that investment in that
exactly.
company they bought. Got it. Got it. Got it. Got it.
So in that sense, the private equities were trying to solve a harder question than what the hedge funds were trying to solve. The harder question was because, first of all, it's a, a private market investment as opposed to public investment. And there's more matching features related to that. It's like if this asset, investing in this startup, this company is going to be successful for me as an investor with the features that I have, not just predicting if the stock price is going up for everyone, it's a good investment. This last 5 years, we have definitely seen some success in this case. I have worked with top funds that have done this. I had a dinner with CEO of General Partners, William. I have worked with partners in EQT and other places. Basically, all of the big funds have these teams right now these days, and they are doubling the size of the team. So all the names you can imagine. And there is some success in terms of doing this. I heard from William actually over the dinner that he has a team of 6 people for investment committee for every deal that they should vote. And now he has assigned AI as the 7th seat. So AI should vote yes, no on those investments. So it shows a lot of trust in these algorithms and progress. Now, importantly, what to know is that, yes, those algorithms are to have them in-house is expensive. And these data scientists are expensive. And developing software is just not core business of funds. We have seen a U-turn kind of movement in the last 18 months in the funds with the progress of ChatGPT and generative AI, like all the large language models technology. The U-turn we observed is this, because if you had asked me like 2 years ago, is it fair to start from natural language processing, from large language models, generative AI? The answer would be no, because they are complicated algorithms. And you want to stay with easier predictive AI. Why do you want to do like those? Do you have the capability to train the entire terabytes of Wikipedia in your system? You don't, right? Only someone like OpenAI can do that. So the answer was no. But now these algorithms are made commercialized by OpenAI. So now everyone has access to them. Now the answer is quite the opposite. These days I say start from generative AI because look, they are way more accessible and cheaper than predictive AI. So that's the place you want to start. So this U-turn has even have impact on the big funds in the sense that some of them have rethought their strategies to focus on generative AI for a period of time and get back to predictive AI again, or just continue with predictive AI. And they are basically trying to figure out what works with them with the momentum they have with predictive AI. I encourage people to look at the Forbes article that I had on that topic, which is basically delving into these use cases, these different cases. But now when a fund talks to me and a lot of fund managers ask me where to start, I always give them this framework of thinking about the use cases. The framework of thinking is that there are 2 general use cases for AI. They are operational efficiency and they are alpha generation. What I mean by this is that the operational efficiency is in the sense of doing things we do faster and at higher quality. For example, faster due diligence, faster investment memo preparation, faster LP reporting, faster analysis of the emails we got inbound, SIMs and others. This is operational efficiency.
Does it include monitoring and diligence?
Exactly. Monitoring and diligence, KPI monitoring of portfolio companies, anything that is like routinely done. Other side, the alpha generation, the other camp is finding X. And X could be a good deal, a good LP, a good GP, even a good individual to hire for your portfolio companies or internally. Finding X. These 2 category of use cases, which was operational efficiency and alpha generation, you can see the difference. And the way I put it this way, because the first category is generative AI kind of technology underlying that, writing documents, writing reports, finding sources of information. The second category, which was alpha generation and finding X in the market, is predictive AI. It's a recommendation system, recommendation algorithm. With this framework in mind, with the framework of operational efficiency and alpha generation and how they can work, I encourage funds, every fund, to basically think about it, what works best for them. But the pattern that is coming out of many experiences that funds have done is that generative AI, starting from those immediate low-hanging fruit, is is more appropriate for the funds to make those success with AI and build that culture of AI adoption in the funds. It's important that 70% of AI transformation is building that culture. When I was working in McKinsey with the funds, maybe 30% is the solution. 70% is make sure people adopt that solution, cross that barrier. That's why in AIx2, whenever we give them the software, we also give them education, and we also give them a strategy for adopting that in that solution. And even that strategy we embed with their engineering, data assessment, and everything, because that's the 70% of the work that you want to do to make sure AI is successful. And if you do it correctly, the momentum will keep going. You can embed other use cases in the future. But if you fail in the first step, especially the first step,
Right.
then the culture is harder to fix, and there's more resistance for the organizationally to adopt AI.
What are some of the challenges to adopting the AI in terms? You've mentioned one, which is training. What are some of the other challenges that funds might face in adopting AI, even if it's just for operational uses, as opposed to, as you said, predictive alpha generating uses?
Mm-hmm. Yeah, so the main challenge we hear from fund managers, and again, that's one of the questions in our survey, is exactly what you said, which is complexity of use, culture, and training. That's number one. And the example that we can all relate to is the use of technology over COVID when pandemic happened. Like we didn't used to use Zoom and this online meeting this much, but the technology was there. And it's not super hard to use Zoom or online meetings, right? But there was a cultural barrier, a mindset shift that because of the pandemic, we had to go through that. We had to all go learn how to use Zoom. And then now we are happily using that more efficiently meeting, got used to that culturally, it's just meet over. Same thing with AI. The technology is there. And it's a matter of cultural shift, mindset shift, and a little training to cross this barrier and start using that in a daily basis. Now, with that said, there are other limits that funds, other concerns or barriers that funds face. One of them that I see a lot, and that's why actually I exited McKinsey and I'm back in Stanford and we started this company, is lack of a good solution. When people think about, let's say, generative AI, ChatGPT or these large language models, they are the operating system of generative AI. As an example, like, for example, consider a dictionary. A dictionary is an operating system for translation. Translating with a dictionary is a time-taking process because we got to go back to the dictionary word by word and translate. Now, a product is what uses a dictionary and makes a full translator. That's now a product that is easy to use. In the same way, like operating system of Microsoft or Mac OS, these are all operating systems that we have had in the history, and there's products on top of that built for using these on top of these OS. ChatGPT, large language models are the OS. Using them immediately for these use cases is just hard and time-taking. So turning them into products is a shortcoming in the market that AIx2 has tried to address, and we have developed our solution. That's one. There are other barriers other than cultural and the solution limits that we have. One of them is, for example, the regulatory and compliance issues. Absolutely important. A lot of times funds comes to us and they want to make sure they have something that is conservative and this helps them to have it in a secure way. So someone who understands them and works with them and has the secure results for them is important. The other thing we hear less and less these days, to be honest, like through the survey, it's our ongoing survey just keeps the pulse of the market, is about job replacement and concerns around that. We have seen a wind down on that because people have realized that AI is an augmentation. Humans are going to be in the loop. And what it does is just like what the other technologies did historically to us, what the steam engine did, what the electricity did, which is helping us move to things that are more added value for spending our time, right? Now we can work from like repetitive writing documents and writing Excel and working with Excel workbooks and writing Word documents and editing. We can move to next step that machine does it, and we can work on real investment, real thinking, real relationship building, and like these kind of real added values that we have. This is the other thing that we have heard across the funds.
You've mentioned a number of barriers, training to risk management, which is the confidentiality and the security of it. Are there technological barriers for the funds beyond just adopting the AI? What I'm thinking is, do they just use ChatGPT? Do they develop their own LLMs?
So there are two general answers to AI adoption, I guess any technology adoption, which is building in-house and buying from other sources. Now, the answer to that, which one is correct, in this case, in the case of AI transformation, is depending on multiple factors. That is coming more and more clear in the market. When I was in McKinsey and I was working on AI transformation of the funds, a lot of funds were exactly asking us this question: is it worth start investing on an internal AI team, in keep like hiring those, I guess, high salary AI scientists and state of the art R&D, and we are not in the business of software development, so we don't know how to manage a software development, and it's very different than investment. And the, even like simple problems they faced was misalignment of incentives. Like they hired data scientists, naturally they wanted to become investors in those firms because that was considered the prime seat, and there was a misalignment of incentives. And so this, like building this whole AI successful internal team, has some challenges. Now, the main thing that I want to mention is, first, should you decide in-house versus third party, and what are the parameters if you do in-house or if you do third party, what you should do? So the first question of in-house versus third party, I mentioned about the challenges of software developers in-house. The upside is that if you keep up with that and you do have that, you can have a very tailored result, very tailored product for your own needs. And hopefully your AI teams are agile enough to, if they are like good quality AIs and you have done a good job in starting that, to maneuver and make like new tailored versions for you. Now, the rule of thumb answer for AI versus third party is depends on the size of the fund. Investing in AI development, because it's rapidly changing, it's state of the art, you need to hire PhDs and you need to hire like multiple AIs and the infrastructure and everything. That's going to be costly. So if a fund is beyond, I would say, if a private equity is beyond $50 billion, that's probably where it's clear that they may want to have like AI teams internally. Even that, sometimes like they see a lot of bureaucracies to do that and they find it hard. For pension funds and fund of funds, the story is different. Even at multiple hundred, we have seen them going with third parties because they are just less reluctant to have internal IT teams. So it's really a function of the type of investment you have and the size of the total asset under management you have. But nevertheless, if you look for the second thing, the question I said I will answer is, if you look for what profile you should look for, get the people who provide these solutions should have definitely capability to do advanced AI research and advanced AI engineering. That is because AI is a rapidly changing field. And working on AI without understanding the future and vision is like investing in cryptocurrencies. It's hyper speculation then.
Right.
You want to have clear vision of what AI is and where is it going, because it gets everyone off on surprise. And there were a couple of surprises in the last year here in Bay Area that was unexpected. And like one of them, for example, was exactly what you said, one of those surprises, like building LLM in-house. There was a lot of people who invested easily $50 million to build some LLM in-house. Like, we want to have our own large language model that is not garbage in, garbage out. That's fully like for us and for our business. It is proven to be a waste of investment now, because it is proven that ChatGPT and large language models, with more and more data fed into them and better engineering, they were able to cross the barrier of hallucination and low quality. So that was a wrong vision to AI that wasted $50 million, if not more, at some funds and some firms investing in AI. So now the idea of training LLM from scratch in-house is over, and it's like an OS that others are providing. Just like for the computers, we have Microsoft OS, Mac OS, and Linux. Like, game is over, no more OS we need, right? But what is now becoming more clear is using those operating systems and turning them into tailored versions for yourself.
One of the challenges of AI previously was there was a question of the quality of the information you were getting out of it. You pose a question and sometimes you weren't getting accurate answers back, or downright wrong answers. And my understanding is that has changed dramatically. Can you give some context to that and how accurate it is today compared to what it was even 6 months ago?
Yeah. So that's exactly the trend. It's basically becoming, there's this embeddings factor that's like engineering way to see how accurate the results are to what they should be. And the way they work is that they give a standard result, which is like, this is the correct answer. And then they check the answer of the machine and they see how similar they are, how similar their embeddings are, embeddings vectors of these words are, like turning them into zeros and ones and then comparing the numbers. That's like in the engineering level, and it has gone like tremendous improvement. It's like 90% and above, and it's getting better and better with as the technology progresses. There are more technologies like rags or multi-agent that is like trying to bound the sources of insight within set of documents and don't have any information out of these documents. That's like important to have control the quality of inputs. There has been massive development here, and we expect just more to happen. So I don't think hallucination or bias is a major factor anymore. That's why I didn't mention it when you asked me the
Got it.
challenges for barriers for entry. I would say like 6 months ago probably, but nevertheless, I still is human in the loop. Still, human should check, and any AI solution that the funds adopt, they should have make sure the solution has an easy way to cross-check the sources of the references. That's like one check for a good results that you want to get. What I would say is that there has been this difference in performance, like back to your first question, buy versus build, and what is the profile? I said definitely look for a team that has AI research capability and can stay on top of that, and has engineering capability, also understands this domain knowledge, and also has the capability to work with a partner. Because whoever comes to your fund and wants to build, like give you a software, work with you to build a software or internal, the software development has its own like ways and circle of development, interactions with the fund managers and others, and that could be a little noisy and distractive because it's different from investment interactions you have. And your core business as a fund manager is investment, so you don't want a lot of. So get people who know how to work with a partner for development, maybe like those consulting firms or others who have had this practice. But one main thing, like coming to technology, a question we get, and is back to your to what you said about hallucination and bias, is the use of closed source versus open source large language models. What it means is ChatGPT, Anthropic, and these names that are like top of a state of the art LLMs, they are closed source. They don't let you download the entire model and use it in your own server, laptop, or computer. You should always plug into ChatGPT APIs and work with them. There are alternatives, which we call them open source, and they are like Llama, Falcon, or others, which you can download, literally put it in your computer and run the entire thing offline without access to internet, literally on your computer, very like controlled and bounded. Well, when we get to this question, like which one to use, like open source versus closed source, the factors of decision is quality and security. Like in terms of quality, it used to be that the closed source ones, like ChatGPT, was 10 times better than the open source ones, which Llama is the best one. That gap is closing in terms of performance because all of them now are getting enough and like large and large amount of data already. So that's like one change. When you asked about quality of results and less hallucination, both of them are doing good now. And in terms of security and others, in the other hand, like people used to be very worried about using ChatGPT and passing their data to ChatGPT in the same way that 10 years ago, people were worried about using AWS for storing their information on cloud out of their own on-premise, on their own databases. Mm-hmm. That concern has also winded down in the same way, like that quality of the open source LLMs like Llama has improved. The security of ChatGPT has also improved. So they have tried to address that. They clearly have some terms in their APIs for enterprise contract that they don't use your data to train their public model. They don't keep your data and others. So that has also improved. At the end, it's a decision by the funds and fund managers what works best for them.
So you've talked about two uses, broadly speaking, of AI, operational and then alpha generation. I'm curious as to maybe you could expand on the alpha generation avenue of using AI.
Mm-hmm. Definitely. That's the part that I can probably touch even longer. That was part of my PhD, designing the recommendation algorithms. And that's a beautiful idea. Like the idea of matching two sides in a matching market, a recommendation algorithm. That's an idea, an AI algorithm that has done a lot of developments in the last 5-7 years. And it's basically trying to match in the concept of like consumer, like Amazon has a recommendation that recommends what to buy when you join. Like to every person, Amazon recommends like different goods, consumer goods to buy, because depending on your profile, your history, your price points, what you have done so far, and sometimes it recommends things that you have never thought about, and you feel like, wow, this is exactly what I needed now. How did Amazon know that, right? Or in the context of media, for example, Netflix has a great recommendation system that recommends the next movie you want to watch.
Mm.
It reasons about it beautifully. Like you have to watch this movie because this is the actor playing in that, or this is the director, or this is the genre, or some reason that it feels like this is, and it's getting better and better. So the idea, the technology of these recommendation algorithms has gone through massive development. And the question is, can these recommendation algorithms recommend an investment to an investor? Can they match an asset? If you are a real estate investor, can they find a good real estate for you? If they are a VC, can they find a good startup for you? If they are later stage, can they find a later stage company for you? That idea is promising, and there's a lot of work on that. Just the last 2 years, there's 200 paper, academic paper, like technical paper, published on these topics of predictions of matching investment to investors. Now, the thing that we observe is that some, as I mentioned, like 5 years ago till now, some bigger funds like EQT, KKR, Bain Capital, TPG, all of them have started using these kind of recommendation systems in a more active way. But what we see is that these algorithms are still in the hands of those big funds and less adopted by the smaller funds because they are, I guess, expensive and they are not willing to share their knowledge. Why should they?
Right, sure.
Closing the gap between those 200 papers academically, and it's a very beautiful question for an AI researcher to answer. It's really like interesting academic question. Closing the gap and what in reality practically funds want. It's something that I personally have been working on in my PhD, and it's part of our work in AIx2 as well, part of our solutions and products that we are working on that. And there's a lot that should come. I'm excited to see what comes next. I believe that a lot of progress can be made in this space.
In terms of alpha generating, is it that the AI can sift through more data more quickly and find not only poor investments, but investments that the fund or the analyst might not otherwise think of as, I don't know, adjacent to what they might do?
The promise of AI in this space is something like this. Assume a machine that can monitor the entire ecosystem of investment, including all the players, which are, for example, fund of funds, LPs, GPs, and funds, assets that exist, and even individuals, main individual players, and have like all the connections. What is connected to what? Who is doing what? Assume such a knowledgeable agent exists that can monitor everything. And then that knowledgeable agent can also look at the fund and totally understand what is their investment thesis. What is it that is good investment for them? And look at their portfolio and say, okay, so this portfolio with this diversification, that's what kind of new investment they need. And the third thing that Genie, that knowledgeable agent, can do is to match from the ecosystem that it can observe to the preference of the fund. Say for this fund, this situation right now, this is a good asset to go after. Now, such a machine, such a Genie is absolutely like interesting thing to make and build. And a lot of AI researchers are on board on that thing being able to be produced. I can give you quotes from like all the directors of AI teams in big funds and some of the faculties in Stanford, MIT, like working on this. But the main thing is that the data source here, where is the data coming from? So the data here is the mix of alternative data and the structured data. Structured data is Preqin, Capital IQ, TechCrunch, and all of these like databases. And the alternative data is like news, a lot of mega data that exists in an unstructured way in social media, in Google reviews and others. Beautifully, if you had asked this question a year ago, that, oh, can we use the alternative data? The answer would be, it's absolutely hard. How do you want to organize this unstructured, massive data online about like news and everything? Because of the progress of ChatGPT again, there is a way. One beautiful thing of ChatGPT that often people don't see, like the less technical people don't see, is the capability to take unstructured data and turn it into an Excel sheet or a structured data. And that is a massive progress for this problem, because these recommendation algorithms to get that full visibility across the industry, you want to pass to them all of that information, and should be able to get the needle out of a haystack, structure that information. That's what now the ChatGPT, that part of it, ChatGPT can help. But then after that, the capability of machine is to basically swipe the space, something that takes a human, and even like no human probably can do entire that. Like the lower middle market investment, there's like 40K opportunities for some of the clients we work with. No human can track all of that,
Mhm.
right? And even if they do, they don't have the complete like visibility for every even if they focus on an asset, like all the information online and everything, they cannot read all of that. The main part is so more fast, like more deals processed faster, more complete processing of the deals, and being able to reason about it. That's the part that is often missed. Like, how do you want to reason about a deal? Like, if someone gives me a deal, that's not enough for me. I want to hear, why did you choose that? What is upside and what is risk? What is the reason you are putting this in front of me? Like, explain, talk about it. I want to be able to have a conversation with that person. Like, why did you choose this? What was,
Mm.
and that is again something that with ChatGPT is becoming more and more available. Now we can have recommendation systems that we can talk to and say, hey, tell me more. Why did you choose this? Okay, now this part, tell me more. So that is now the state of the art technology, and that's what we are building in AIx.
So, what impact is this going to have on the human capital side of these funds?
So their general answer is that AI is going to be a augmentation now at this stage of the technology, which means that humans are going to be in the loop. Let's say the machine recommends something, like the example I gave you about the general partner. Like they have 6 people and machine is number 7, right? Machine is added to the team, right? Machine is not replacing the team. So that's basically
Yet.
machine being yet. But the machine is being basically that one more source of insight that makes sure nothing is going wrong, everything is checked, no deal is missed, everything is promised timely. And the main part about the machine is that even if it replaces part of our job, there's like two camps generally in academia. Machines are going to take over and we are going to all be without jobs, and machines are going to basically provide more efficiency. And it's the idea of the second cam is the augmentation is that just like previous technologies, the examples I gave, like they will bring humans to get out of some regular work and help them just do more creative stuff. And that's what we're already observing in some of the funds which adopt this. So there is some reskilling required, like learning how to use AI. There's some job description updates required, but I think there's enough to do for the humans in the new space that keeps all of us busy.
Have you seen or been able to actually measure the impact of AI adoption on funds in terms of either alpha, ROI, or IRR, or
Yeah,
whatever measure you want to use?
that's a very good question. So one question we ask in our Stanford AIx2 survey is, what is the KPI you use for
Mhm.
measuring the impact of AI? And we do hear a lot of different answers, and we really give them a hard time to really turn it into a hardcore RPI that can be measured with a ruler. Definitely time saving is something that almost everyone mentions, like time saving for up to 80% for due diligence and others, and time saving in writing documents, time saving source finding source of information. There's amazing time saving. Like once you really get into that, like you pass that 1 2 hour training that you learned how to use the software, it's really like a lot. It's a beautiful how you have saved a lot of time now, and you don't want to get back to the old life that you used to do all of things manually. Once the students, like I give this joke, once this high schoolers learn that all of their things can be done with ChatGPT. They don't want to go back and do them themselves anymore because they can always go play PlayStation or whatever. So, but that's one number one, time saving. We do hear about the long-term return on investments. The challenge with that KPI is that for many funds, it takes multiple years to get there. Nevertheless, some mega funds who have done that 5 years ago, they already have claimed that they have captured exactly this KPI. I guess EQT is saying that they have 10 deals that they exited and they were originated with the machine, they exited successfully. And this is like amazing KPI they're hitting, right? So that's a longer term KPI to capture. But there is some more immediate ones other than time saving and cost saving, which is like a lot of cost involved in like the hours that they spend or other ways. It's also more complete, less errors in the writing of the emails, drafts,
Mhm.
memos, others. Like they say, oh, my analyst used to give me a version of these memos, and there was always like 20 errors I had to go and tell them to fix. Now it's only like 2 errors, or
Mhm.
there's no error, right? So this is the other KPI they use to measure the impact of AI.
So you have founded and are CEO of AIx2. So I'm curious, what is that and what do you do there?
So AIx2 is the idea of AI for AI for alternative investment. So
Mhm.
basically, we are AI square, AI multiplied by two. So we are AIx2. It came out of when I was in McKinsey and I was serving as the AI manager of AI transformation for funds. And we used to give the funds all this advice, what they should do with AI internally, or even with portfolio companies. And they asked us how. And naturally, the McKinsey, like as a firm, was not in the business of making a software solution or an engineering solution. So that was the shortcoming in the market. And I decided with the team of my friends in Stanford to go ahead and basically build that solution for this business in a correct way. That's the story of, and that's based on the, as I said, like the PhD research I have been doing for AI for marketplaces, same with the other members of the team. So off of that, so far, like we have tried to be like closing this gap, like between academia and what is the state of the art, and educating people and what the fund managers need to know. That has shown itself through our conference speakership, keynotes, or journal publications, CIO, Forbes, Middle Market Growth, podcasts, like the one that I'm doing with you right now. We have definitely been thought leaders in this industry, but our core success is building solutions, building those software that is available to funds to use AI internally in a platform basis. That's our white paper, which says that AI, starting from immediate use cases and winning them, it's going to grow and there will be other use cases. And for AIx2, we started from generative AI use cases because of the reasons I mentioned earlier, off of our survey of the market and others. So we started from there. The product has been complete and it's being used by the customers. We have got a lot of good traction and good feedback around it. We have worked on our second product, which is the predictive AI and around the idea of algorithms. I mentioned a bit of it here.
Mhm.
And that product is soon coming to the market as well. So it's a journey that we are taking here. We do strongly believe that AI is something that should needs to be done in state of the art research. That's why we are very close with academia. I'm a researcher in general business graduate school of business in Stanford. So same with team members. So we try to be like literally a state of the art research in AI. Stay close to those core teams of AI and heart of AI in Bay Area, Silicon Valley, and try to close this gap by being close to the industry and fund managers. So far, we have these solutions, the generative AI, the document analysis, and it's basically helping the funds for using these functions of insight extraction, finding source of information, and writing reports to faster due diligence, faster investment
Got
memos,
it.
and bringing that alpha to the market.
Got it. So this has been fascinating. This is obviously a very hot topic among fund managers and capital allocators generally. One final question for you, and I appreciate you taking the time to speak with us. You know, this is going to have an impact for years to come, and I'm thinking of the young professionals, college students, and young professionals entering the workforce and looking, for a career in private markets. What's your best advice for young professionals entering the asset manager world in the face of this AI revolution?
The answer to this, let me give you a broader answer generally for the next generation, what they should learn, and then focus on alternative investment. The next generation, they should learn, the main skill they should know is how to learn new skills, learning new ways to do things, and be able to have update with technologies and
I thought
basically
that was always something they should know, by the way.
yeah, exactly. Like the era of having one job for 30 years is over.
Yeah.
So we should just realize that, embrace it. The average year of working in big corporates like Google, Microsoft, others in Bay Area is now 18 months, so or even less. Like people switch jobs because of the reality of changing the demands in the market. And that's number one. And then when it comes to alternative investments, I would say that for juniors who enter this, building that intuition about the market, like high level human reasoning, complex reasoning, building that intuition is absolutely important. Like that's something that is going to stay. And then understand the processes, understand how things are done at the core, and try to do it like a couple times yourself, but realize that these are going to be things that is going to be done with the machine soon. So you are not gonna need, you don't need to do them yourself anymore. Like realize that, and basically start building some technology awareness. Like understand AI, like read about. I don't expect everyone to be AI scientist, but understanding AI at the core, like the terminology, what is deep learning, what is like neural network, what is the vision of technology, where is that taking us? Like understanding them helps them to better maneuver through their career and their job cycles.
Thank you, Doctor, for joining us on Private Market Talks. This has been a fascinating conversation.
Amazing. Thanks for having me here, Peter.
And thank you, everyone, for listening. If you enjoyed this episode, be sure to subscribe so you don't miss any episodes of Private Market Talks.